Today, I'd like to discuss the significant price targets being set by the mainstream media for AMC, with expectations of the stock price reaching as high as $400 per share. I want to provide an explanation as to why these targets could indeed be realistic and achievable, even without a squeeze scenario. However, it's important to note that such a scenario would actually trigger the squeeze itself. Hey, welcome to AMC Daily. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But everyone remember, this is not a financial advice video. AMC Diamond Hands recently tweeted about price predictions for AMC, emphasizing that these predictions exist even without considering a squeeze. I managed to locate the original source of these targets, so let's delve into their calculations and projected figures. According to their analysis, based on the average yearly growth of AMC Entertainment stock over the past decade, the forecasted stock price for the beginning of next year is $8.29. Following the same methodology, they have provided predictions for each year until 2030, indicating a steady increase in the stock price over time, eventually reaching a forecasted price of $398. This approach utilizes historical data and AMC's performance to project future growth, suggesting that as AMC continues to improve and recover, its fundamentals alone could drive the stock price to $398 per share. However, I must emphasize that I haven't abandoned the possibility of a squeeze. I see the fundamentals as just one catalyst among many that could potentially trigger the squeeze. Let me clarify what I mean by labeling the AMC fundamentals catalyst as similar to the Tesla fundamentals catalyst, which virtually guarantees a squeeze scenario. There are various scenarios that could potentially lead to a squeeze, such as the current AMC cost of borrow fee, AMC FTDs, new regulations, Citadel's bankruptcy, other hedge funds facing insolvency, a market crash, and other catalysts that could impact the stock. It's worth noting that the likelihood of certain scenarios triggering a squeeze is higher than others. For instance, if Citadel were to go bankrupt, a squeeze would almost certainly occur. Similarly, a market crash would very likely lead to a squeeze. However, we also have other catalysts, such as the FTDs, which currently have a slightly lower chance of triggering a squeeze, given that they haven't yet done so. Nevertheless, I firmly believe that AMC's fundamentals have the potential to generate a guaranteed squeeze, just like Tesla's fundamentals did. As Tesla continuously improved its fundamentals over the past 5 to 10 years, it successfully squeezed out short sellers, resulting in the stock surging from $10 or $20 per share to over $1,000 per share at certain points. The article I mentioned predicts a similar trajectory for AMC, suggesting that if AMC sustains its current growth, achieves profitability, generates cash flow, and reduces its debt in the future, a squeeze would naturally occur as the price rises to $400 per share and beyond. Consequently, as the stock surpasses key price levels like $30, $50, and $60 per share, short sellers would be compelled to exit their positions, triggering an AMC squeeze akin to what happened with Tesla. To reiterate, the AMC fundamentals catalyst is just one potential trigger among many that could instigate the squeeze. It's intriguing to observe that even mainstream media outlets and news publications are beginning to forecast an upward movement in AMC's price. Interestingly, we recently came across a tweet from a supposed Reuters Europe account stating that AMC Entertainment Holdings filed for bankruptcy due to overwhelming debt. It's important to recognize that this news is false, constituting fear, uncertainty, and doubt, FUD, meant to mislead AMC shareholders and encourage them to sell their shares. It becomes even more devious when we consider that this account is actually a fake, meticulously created to mimic the legitimate Reuters Europe account. The fake account has significantly fewer followers compared to the genuine account, and its verification badge is different as well. It appears that someone went to great lengths and expenses to create this counterfeit page, including copywriting the Reuters logo, paying for Twitter verification, and purchasing fake followers. These efforts aim to spread misinformation and manipulate AMC shareholders into making unfavorable decisions. It's likely that these actions are the work of short sellers or paid individuals seeking to undermine the stock. The reason for their heightened efforts may be the impending squeeze, indicated by Blackstone's real estate investment trust announcing major liquidations. As I've mentioned before, these liquidations have been anticipated as many real estate funds are divesting their portfolios in commercial real estate and other assets. Bar Chart tweeted about Blackstone's liquidations, revealing the disposal of $3.1 billion worth of its commercial portfolio and potentially its holdings in Las Vegas due to the escalating redemption requests for its real estate investment trust. Although I cannot confirm if Blackstone is involved in shorting AMC, their liquidation adds them to the list of hedge funds that are being margin called and forced to downsize their funds. Blackstone Real Estate Investment Trust, which recently made headlines for enforcing a restriction on owners' withdrawals for several consecutive months, is now attempting to raise additional cash, much like Citadel did a few years ago when they sought billions of dollars through equity raises. It's highly likely that these hedge funds are concerned about the increasing cost of borrowing AMC shares, which is once again on the rise and projected to surpass previous highs. Stonks Batman tweeted that the borrow rate for AMC has reached 868%, the highest it has been since April when it peaked at 979%. As demonstrated by the chart, AMC's cost of borrow fee is experiencing a significant upward trend, particularly as failed to deliver FTD positions continue to resurface. It's probable that we may witness borrow fees exceeding 1,000% and potentially even reaching 2,000%, 3,000%, 4,000%, or even 5,000%, as suggested by Crystal. The increasing trend line indicates the likelihood of borrow fees surpassing 2,000%. Another interesting development is the ongoing activity of the FTX tokenized stock for GameStop. Mags tweeted that the GameStop tokenized stock on FTX remains active, unlike the recent temporary activation of the AMC tokenized stock on crypto.com. The GameStop stock on FTX, as depicted in a screenshot from July 5, 2023, is still trading, showing significant fluctuations between $16.81 and $19.62. It's apparent that short sellers are persisting in their attempts to manipulate both AMC and GameStop through these tokenized securities. Lastly, there's a humorous observation regarding the housing market. Unusual Whales tweeted that the number of homes available for sale in the U.S. hit a record low in May. Bigham's responded, highlighting the reluctance of sellers to lock in new higher mortgage rates, as many of them had secured loans at interest rates below 4%. This creates a situation where people are looking to buy homes, but there's a shortage of available properties. The tweet suggests that we could use someone like Doug Sifu, who is jokingly referred to as the infinite liquidity fairy, to generate synthetic homes and meet the demand. The irony lies in the fact that while synthetic homes are not a viable solution in the housing market, Doug Sifu is allowed to sell synthetic shares and act as a liquidity provider, which has sparked criticism regarding market manipulation. Guys, that's all we have for you today. What is your opinion about AMC stock? Get involved and let us know in the comments down below. Thank you for watching.